Hello and welcome to the paid weekly recap for the week ending April 17th, 2026. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the paid system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. I also urge you to read the characteristics and risks of standardized options available with the highlighted link, and if you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we'll get into the week. The 10-year yield drifting lower. It looks like it was ready to go further down. The spike generally driven by concerns over the broad economy, the global economy, the conflict in Iran. And as the week progressed, things shifted from last weekend where we had a failure in the peace talks. By the end of the week, the Strait of Hormuz was open. Well, over this past weekend, the Strait of Hormuz is closed again. It was open very briefly, and now things look to be escalating again. Maybe we get a deal, maybe we don't. The market is uncertain, but throughout this week, the market was driving interest rates a bit lower and the market higher. Now, over the weekend, looks like that's going to start to fall. How far it goes down, anybody's guess. The rate of this recovery from the lows at end of March until Friday's highs was exceptional. It was one of the quickest recoveries from a pullback in the market that we've seen in decades. This was a one-way street to the upside. For the broad market, that is. For risky assets, that is. Not for everything. Energy stocks fell. Safe haven type stocks didn't really do much or didn't perform particularly well. But a lot of people started piling into risk over this last 2 weeks. Now, will they be rewarded? That is the ultimate question because we're going into tech earnings this week. We've got some big tech names. We had this change in the perception of what's going on in the Middle East over the weekend. The ceasefire ends Tuesday night, Wednesday morning. Will we get an extension? Will we have a deal, or will things erode and go back to what they were in March when the market was testing 6-month lows or making 6-month lows? All to be determined. This week is certain to be an interesting one with lots of fundamental inputs. Tech, exceptional this week. After some sideways behavior for much of the last 6 months, prior to finally starting to break as we got near the end of the drawdown from the situation in the Middle East, and then a just spectacular rally as well. Again, new all-time highs. Small caps also making new all-time highs. Less of a pullback overall. There was a market shift from tech into small caps through the end of last year, the end of 2025, maybe even at the beginning of 2026. The pullback wasn't particularly huge, but it did start earlier because some of that money flow had been moving from tech to small caps already. Small caps also have the benefit of having some energy companies in them and things that could benefit from the higher oil prices. Overall, this market is overbought, bullish, with a fundamental input that may shift it back bearish. Across the board, we've got bullishness and overbought conditions on these big indices. And the fundamental inputs lead to questions. The same point, the VIX, under 18. This market was not prepared for this update over the weekend. And maybe the update isn't that bad. Maybe things shift again on the fundamentals. Maybe the leaders in Iran sit down with, President Trump or his team and come to a deal. But if things don't start to go the right direction again, how low will the market pull back and how high will the VIX go? If the ceasefire ends and bombs start to drop on Wednesday morning, we may be in for a wild week. So stay tuned is the best I can say. Speaking of stocks that really didn't do much during that ceasefire period, TJX was added on Friday the 10th for paid. Looked like it had a good support level here at the 10-day moving average. We did fall down to the 50-day moving average during this week and never really got any momentum. The money flow was focused on risk. Quantum computing stocks, semiconductors, things with high growth prospects. TJ Maxx is a slower growth stock. And so we didn't have that exceptional return this week, unfortunately. Ultimately, made the decision to go ahead and just take the bounce back on Friday to exit at a smaller loss because from the entry point on Friday till here, there just was no momentum. And there are times where just tying up capital with a coin flip possibility of continued bullish momentum just doesn't make any sense. There's going to be new trades. So during that $3.50 fall in the stock, the options decayed by about 47%. Much of this is driven by Delta. So in spite of the low price premium, these were 40, 50 Delta options. So a $3 drop on a 40 Delta option is about $1.20 of the $1.55 loss. There's some theta in there as well, implied volatility falling as well. All in all, it just didn't work out in this case. It also, I think, shows just how much potential upside there would have been had this participated the way the market did. If we had had a 3, 4 standard deviation move to the upside, the market on the whole was up about 5% during that time window. For TJ Maxx, the equivalent in terms of if it had performed in line with the market would have been 7.5%. Massive rally. But it didn't. It just wasn't the winner this week. The rotation, the fundamental updates shifted to other sectors. And while the AI recognized the shifts into those other sectors, the news changing happened all week last week. And so the money flow changed all week last week. Again, this is what makes these sort of time frames where there's a lot of fundamental updates sometimes a bit tougher to navigate. That said, as things get more certain on the fundamental side, the money flow becomes clearer and more consistent. And so we're looking forward to potential opportunities here. We may not see a new trade for paid at the beginning of the week, but by the end of the week, I expect that we're going to have some information. The ceasefire continues, leading to bullish flow for the market, which can get priced in and predicted, or the ceasefire ends, leading to bullish flow in oil companies and energies, and that could be more predictable. So we'll be looking to see how that all plays out. By Thursday or Friday, we may be looking for new opportunities again. I don't expect anything by before Wednesday, before we know what the resolution may be with the ceasefire. But near the end of the week, we'll be looking at new opportunities. As we address those opportunities, please do join us in the live trading room. Mornings from 9:15 till 10:15 or 10:30 Eastern. Vlad and I will talk about market conditions, what's going on, what news we're seeing, what's important to this market, and what may be shifting sector rotation, money flow out or money flow in. All of this will be to be determined. We also talked through a lot of earnings ideas. We've had some really good earnings ideas here this earnings cycle already, and we'll be looking at more this week, especially with stocks like Alphabet, Google, that are announcing this week. So please do join us. And if you can't join us, or if you can and you have questions, I'm always available via email, keith@yellowtunnel.com, and Vlad is Vlad@yellowtunnel.com. Thanks again, everyone, and looking forward to another dynamic week in these markets.